Welcome to Layn Turo University. My name is Conrad Layn. I'm a Turo Par host. You could do this. You could be better than me. I share how to earn 6 figures and 7 figures. Let's get on to it, people. I love y'all. Without further ado, let's get on into it. So I'm going to share how to how to understand, and you want to speak with your CPA. Don't try to send me a crazy email or get mad at me or sue me or litigate me. I'm not your tax person. I'm not giving you any advice. I'm sharing what's working for me, what might work for you, and what's worked for other par hosts that I know, and other Turos I know, and other Airbnb hosts I know, and people that own real estate. So I'm just sharing some secrets. Don't get mad at me. The IRS tax code is a constantly changing piece of literature that's, in my personal opinion, very, very simple, but can be overly complicated because there's so many different changes and variations depending on personal perspectives and how you articulate it. So speaking of your CPA, don't get mad at me. I'm not the one. I'm just sharing the strategy. But without further ado, let's get right into it. So this is what it is, people. If you're interested in wanting to invest in vehicles, you can actually write off typically cars within the first year, which is pretty cool. And when you write off in the first year, you can utilize something called IRS Tax Code 179. And then you can actually qualify it as business usage of over 50%. Then what you can do is allow it to actually depreciate it and accelerate the depreciation in 1 year. So it's pretty cool. So for example, let's say I buy a car that's maybe $15,000, right? And I can typically write off within a 5-year time frame. So the cool thing, if I can write off 1 year to accelerate the depreciation, and the cool thing, that made full 15,000 or 10,000, whatever I spent for the car in the first year, or I could just let it depreciate and get the full amount divided by 5, and I get that tax write-off. So, for example, let's say it was a $20,000 car, right? That means every year I could write off $4,000 within that time frame, right? Or I could find a way to accelerate the depreciation and write it all off. So you've probably heard people write off G-Wagons and vehicles over 6,000 pounds. That's great. And that's beautiful and absolutely true. But you just have to follow the rules to qualify for the tax deduction. The problem is this. I'm a Turo host and I own 30 cars. I don't want a fleet of tanks. I think tanks are so cool, dude. I think it's cool having the missiles on there and the bombers and this crazy heavy vehicle. Awesome, but I don't want a fleet of tanks. I may want 2 or 3 tanks, but if you want to have a fleet of tanks, then keep buying 6,000 pound vehicles. Cool. But did you know that's not all you can do? You can actually write out vehicles under 6,000 pounds, same IRS tax code. And the way it works is like this: from 0 to 6,000, to under 6,000 pounds, you can write off regular vehicles at 4,000 pounds, 3,000 pounds, 5,000 pounds. You can still write it off for this IRS tax code 179. I left the description below that goes in detail about IRS tax code 179. Again, I am not your tax person. Do not sue or litigate me. Don't get mad at me. Do your own research. I'm just sharing what other people do. I talk to these guys and gals, and I'm learning so much every day. I'm so excited, and I'm just sharing it with you. So again, I'm not your tax person. But anyways, I digress. This is what's going on. So like I said, you could write off vehicles under 6,000 pounds, and that's pretty cool. You could do the same as the very popular rule for 6,000 pounds and under 14,000 pounds. You could write it off. And again, these are within 5 years, or you can accelerate and get what you paid for the car within the first year. Pretty cool. But it gets even better. When you start hearing about the Grant Cardons, the Donald Trumps, the Meet Kevins, and all these people that buy jets and everything, which is pretty cool. The way this works is they use that same IRS tax code. I travel around the world, and if you've traveled, you know that jets and airplanes are considered vehicles. They're actually called buses. So the cool thing is that the IRS tax code sees sees jets as vehicles and cars. So what essentially happens is when you have a vehicle that's over 14,000 pounds, you could write that off as well. You could accelerate it. There's different rules that you just have to qualify for. But the point is you write off these vehicles typically first year or 1 through 5 years, etc. Pretty cool. You just have to qualify for it. And then there's something called net operating losses, carry forward and carry backward. So for example, let's say I bought a car for let's say I bought a car for 10,000. I have 30 cars. Let's say I bought one car for $10,000, right? And let's say I earned $100,000 in 1 year. Okay, so let's say I have to pay taxes of let's say $8,000. Heck, whatever. 8,000. Okay, this is hypothetical. This isn't real. Hypothetical. I paid $6,000. So what this works is that the way is where I bought the car that same taxable year, and now I get the vehicle, and now I get that what I paid for the vehicle. Even though if I bought the car with cash, which I've done, Or if I just put a small down payment or no down payment, but it's financed to own. This strategy does not work for the lease. That's a different strategy for a different day. I might go into a lease strategy in this, but I'll share more of that on another video. But the point is, it doesn't work for leases because the company or the dealership that owns the car gets those same benefits that you're getting because they're actually the owner. You're just leasing it to them, which leases essentially are just long-term rentals. That's all it is for 2 to 3 years typically. So I digress again. The point is, if I get paid, say I earn $100,000 in rental income, right? Or whatever. So, or even if I'm a W-2 person, or if I have a different job, it could take off your W-2 income. But the cool thing is that $10,000 I paid for the car, I could depreciate over 5 years per IRS tax code 179, or I could accelerate the depreciation and get that $10,000 in 1 year. So let's say I owe $8,000, as I mentioned before, just for a hypothetical reason. Now that $10,000, instead of me paying $8,000 taxes, the government owes me $2,000. And now I have 30 cars, right? Imagine how that works. This is how people get wealthy. So hold on. You're saying I didn't pay taxes? No, yeah, I didn't pay taxes, but legally though. I do not believe in tax evasion. Do not avoid taxes. Do not buy assets and turn your rental income into a way of showing that you could depreciate expenses that you have made for vehicles or real estate for into Airbnbs, etc. And that's how you do this. So now, instead of owing $8,000, I'm owed $2,000. And the cool thing about this, how wealthy people get really nice with this, is that now you can use this as a net operating loss carry forward or carry backward. So you could carry this forward to next year, meaning now you have $2,000 to use to reduce your taxes again. And if I buy another car, say another car for $10,000, now I could do this all over again next year. Now that's $10,000 plus an additional $12,000. Now I have $12,000 of tax deductions. So if I earn more taxes on my W-2 income or my 1099 income, even if I work a regular job, I could offset it with Turo or just a rental car business, hire car, get around. It doesn't have to be Turo. If you just rent cars independently, this is what people in real estate do. The same rules. That's what happens is you're stimulating the economy, so the government's gonna work with you. You're providing cars. You're providing a service. You're providing a place for people to lay their head at an Airbnb. It's like a hotel. Absolutely amazing. Absolutely amazing. That's wealth right there. The knowledge. You know how much I had to go through to understand this and meeting with the right people, watching the right videos, understanding just all of this. Please, please, please do your research. Understand how to learn about taxes. Follow my channel. I'm gonna share a lot of my journey. I'm gonna share my mistakes, my trials, tribulations, and transgressions. I've been through a lot, but I've learned so much wealthy information at a young age. And I don't care if you're older than me, if you're younger than me, if you're 60, 70, if you're 50, if you're 20, if you're a young kid out of high school, dude or gal, listen to this and learn. And again, do not litigate me. Take responsibility. I am just the dude on YouTube in front of your TV or camera or in front of your phone. And I'm just sharing what wealthy people do and the secrets that have blown my mind because now I understand these people play this game. It's beautiful. It's absolutely beautiful. You become friends with the government, with the IRS to stimulate the economy because now I'm providing a car to people that need to get to work, that need to go on a vacation, a business trip, etc. I'm helping to stimulate the economy, and these people are typically W-2 wage earners or business owners, but typically, and they get taxed from the government, and I get all these benefits as a wealthy person. Absolutely beautiful. So yes, there's a lot more risk, but it's totally worth it to be your own business. And again, even if you're a W-2 wage earner, if you're a doctor, physician, if you work at McDonald's, I don't care how high up the pay grade or how low the pay grade is, you can use Turo to offset with depreciation IRS tax code 179. Look it up, check the description below, and do your own research and ask your CPA. And if your CPA doesn't know that, unfortunately, the way it works is I met many CPAs where I end up teaching them, and that's why I know how to fire. I fired 8 different CPAs, not because I'm a douche, not because I'm a bad guy, but I don't want to go to a CPA that I'm teaching. You know what I mean? I need to go to someone where they're teaching me something and I'm paying them. I'm happy to pay them for their services. I've gone to 8 in the last 2 years I had to fire because I found they did things incorrectly, and I double checked with them. I read the tax code myself, and I was very disappointed. So you start understanding as you grow, you start having to invest in higher quality CPAs, but it is what it is. So you're gonna learn a lot from here. Anyways, love you guys. That's how the wealthy keep their money. That's how you actually do it if you wanna invest in cars, you treat it as a real estate property, rent it out, the keys, when you rent it out, that's where you cause a taxable event where you can have the, as I mentioned, the net operating loss carry forward, where now pretty much it's $2,000 tax deduction the next year. Or you can also do net operating loss carry backwards, where you can actually say you had a tax year in the previous year, you can reduce your tax that maybe pay for that for your taxes, maybe pay too high taxes, or maybe you're like, you know what, I want to get paid back. That can work. So when you're investing into cars, you can use your tax deduction for the previous year or for the year ahead of you. Pretty cool. Or for the current year. But you only have these benefits if you're a business owner and you're investing in real estate, cars, which are super unorthodox, because everyone talks about wealth and homes. But think about it. When you invest in a home, essentially, to become wealthy, you're renting it to people. You're not buying it for yourself typically. Is that the same thing with cars? Anyways, like, subscribe, share, follow the links below, learn about IRS Tax Code 179, follow my channel. If I gave you any type of content or motivate your thinking, I'm just a young man trying to do my best to learn. Follow my journey. I'm not perfect. And if you're perfect, teach me the ways. I am far from perfect. Made so many mistakes, but the more mistakes you make, the more you learn. Love you guys. Like, subscribe, share. Ciao.